Get ready, because this could be the biggest financial news for seniors in years. President Trump's historic tax break is here, and it's designed to let seniors keep more of their hard-earned Social Security money starting now. If you're living on a fixed income or worried about rising costs, this game-changing update could put hundreds, maybe even thousands of extra dollars back in your pocket each year. We're talking about a tax break that slashes the amount seniors owe, protects more of your benefits from taxes, and helps you stretch your monthly income further than ever before. But how exactly does it work? Who qualifies? And what does it mean for your next Social Security check? In this video, we break down everything you need to know. No confusing jargon, just clear, straightforward info to help you maximize your benefits and secure your financial future. Whether you're retired, still working part-time, or planning ahead, this tax break could change the way you budget and live in 2026. Don't miss out on this essential update that every senior in America needs to hear right now. If you want to make sure you keep more of your money and get the latest updates on Social Security and senior tax breaks, hit that like button now. It helps us reach more seniors just like you with life-changing information. Let's dive in and see how President Trump's historic tax break can make a real difference in your wallet. President Trump's historic tax break for seniors is shaking up Social Security like never before. If you've been feeling the squeeze from rising costs, shrinking savings, or confusing tax rules eating away at your benefits, this update could be the lifeline you've been waiting for. This isn't some vague promise or political talk. It's a real, actionable change that affects millions of seniors starting right now in 2026. Let's get straight to the point. Seniors can now keep significantly more of their Social Security income thanks to this tax break. But how does it work? What exactly changed, and what does it mean for your wallet? To understand this, we need to step back and look at how Social Security benefits have been taxed historically. For decades, many seniors have faced an uphill battle with the IRS, seeing a chunk of their benefits gobbled up each year. It was frustrating and confusing. Sometimes you'd get a raise in your benefits only to see taxes claw much of it back. This tax break aims to flip the script by easing that burden in a way few anticipated. One of the key parts of this change is the increased senior tax deduction, which can reduce your taxable income by up to $6,000 if you're 65 or older. That means less of your Social Security money gets taxed, leaving more in your hands to cover everyday expenses. And with inflation still impacting everything from groceries to medical bills, every dollar saved counts. This isn't just about tax savings, though. It's about financial dignity. Seniors worked their whole lives, paid into the system, and now it's time for the government to give back in a meaningful way. This tax break isn't some gimmick. It's designed to help seniors live more comfortably and confidently in their golden years. But don't just take my word for it. The Treasury Department and the Social Security Administration have officially confirmed these changes. They're rolling out new guidelines and payment schedules that reflect this historic break starting immediately. For many seniors, the next Social Security check you receive could be noticeably higher, after taxes, than what you're used to seeing. It's also important to recognize how this affects different groups of seniors. If you're a retiree relying solely on Social Security, this could be a game changer in your monthly budgeting. If you're still working part-time or have other sources of income, understanding how these deductions interact with your total earnings can help you avoid surprises during tax season. Now, I want to walk you through exactly what this tax break looks like in practice. Imagine a retired couple who, before the change, paid hundreds of dollars annually in federal taxes on their combined Social Security benefits. With this new deduction, they could potentially keep all that money instead, freeing up cash for things like healthcare, home repairs, or simply enjoying more of life's pleasures. It's not just about surviving, it's about thriving. On the flip side, some seniors might wonder if this tax break affects eligibility for other benefits, like supplemental security income, SSI, or Medicaid. The good news? These programs are carefully designed, and this tax deduction does not negatively impact eligibility. It's purely a federal income tax benefit, meaning more money stays with you without risking other critical support. But here's the catch. This tax break isn't automatic for everyone. you must claim it on your federal tax return, and the IRS has updated its forms to include a special checkbox and deduction line specifically for seniors to benefit. If you've struggled with filing taxes before or aren't sure how to navigate these new forms, don't worry. We'll cover exactly how to make sure you don't miss out. And if you're someone who typically files taxes with a professional or uses tax software, this is the year to double-check that the software includes this deduction or inform your tax preparer about it. Many seniors rely on assistance during tax season, and awareness of this new benefit will be critical to maximizing your return. Another powerful part of this historic tax break is the new no tax on tips and overtime provision for seniors who are still working. For many, working part-time after retirement is a necessity or choice. In past years, extra earnings from overtime or tips were often fully taxed, reducing take-home pay. Now, under this provision, the first $12,500 of overtime and tips are exempt from federal income tax. This can mean hundreds or even thousands of dollars saved annually for working seniors, providing a fresh boost to income without added tax penalties. This is especially important considering inflation and the rising cost of living. Seniors juggling bills and medical expenses can use this extra financial flexibility to breathe easier each month. Whether you're helping support grandchildren, managing healthcare costs, or just enjoying a well-earned vacation, this change helps make it possible. Let's also talk about Medicare premiums because they often eat into your Social Security benefits. This tax break doesn't directly reduce Medicare Part B or D premiums, but by lowering your taxable income, it can indirectly lessen how much tax you owe on those benefits. It's a complex relationship, but understanding it can lead to better financial planning and less stress about monthly deductions. Now, you might be wondering about the timeline. When do these changes kick in? The answer is right now. The IRS and SSA began implementing these changes in early 2026, and many seniors have already started to see the benefits reflected in their recent payments and tax filings. If you haven't noticed yet, it might be because of your payment schedule or when you file your taxes, but rest assured, the impact is coming. If you're feeling overwhelmed, that's normal. Tax law changes can be complicated, but the important takeaway is that this historic tax break exists. It's real, and it can make a significant difference in your financial well-being. Don't let confusion keep you from claiming what you deserve. One of the best ways to stay informed and take full advantage is by setting up your My Social Security account online. This portal gives you a clear view of your benefits, payment history, and personalized